Chances are, if you're watching this particular video, you want to make a lot of money. So what I'm going to do in this video is I'm going to share with you my last 8 years of experience and study into making money, wealth creation, the financial markets, human psychology, to help you do exactly that, make a lot of money. Now, the first concept that we have to understand here is the origin of money, where money actually came from, what money is, etc., etc. Money was initially established to facilitate fair exchange. It was a means of facilitating fair exchange. Let's imagine you had 3 individuals in a village. You had a farmer, you had a shoemaker, and you had a painter. In order to exchange between the 3 different value systems, to exchange between the 3 different individuals, the farmer could offer food to the shoemaker could offer shoes to the farmer could offer food to the painter could offer paintings and artwork to the farmer, and so on and so forth, to ensure that fair exchange was maintained and there was an exchange there that could be facilitated. But let's say, for example, the shoemaker gave the farmer a new pair of shoes and the farmer gave the shoemaker some food for the week. And the farmer gave some food to the painter and the painter gave the shoemaker, or the farmer rather, a very nice painting. Now, there would come a point in a week or so when the shoemaker and the painter needed more food, but the farmer didn't need a new pair of shoes, nor did he need a new painting. So there would come a point where it would be difficult for some individuals to facilitate fair exchange. And this is exactly where money was introduced. Money was introduced as a medium to help facilitate fair exchange. It was something that everybody agreed on the value of to help facilitate fair exchange. So if the shoemaker needed some food, but the farmer didn't need a new pair of shoes that week, the shoemaker could offer something to the farmer that they would value and that they would agree on to make that fair exchange, which is what money became to be. So all money is a medium to facilitate fair exchange between different value systems. It's a medium to help facilitate fair exchange between different value systems, individuals with different value systems in society. Now, any label of money is good or money is bad has nothing to do with money itself, and has everything to do with people's interpretation of money. So an important concept to understand when you're making money is that if you're judging money as good, you're most likely going to go off and sacrifice your life in pursuit of money. You're going to have fear of missing out on it. You're going to have fear of losing it, etc., etc. You're going to sacrifice your relationships, your health, in order to go off and pursue money. You're going to make money, and you're going to be extremely stressed and frugal because you fear losing it. Okay? Whereas if you think money is bad and the root of all evil, chances are you're going to have an unconscious motive to squander it, and you're not going to ever accumulate wealth. And whether people want to admit it or not, wealth is a huge component. Having money is a huge component of being empowered in society nowadays. If you have money, you can afford better education, better food, better health, a better lifestyle, etc., etc. So whenever we put labels of good or evil on money, we're doing ourselves a disservice. But understand that the labels of good and evil don't come from money itself. They come from our interpretation, our narrow interpretation of money. They come from humans labeling money good or bad. Money itself is a neutral means of fair exchange. So an important exercise to do throughout your life is to ask yourself, money is ... and understand and bring to surface what your beliefs, even unconscious, are around money. If you think money is the root of all evil, or if you think money is bad, or if you think money ruins relationships, even if these are quiet whispers at the back of your mind, these beliefs and judgments around money have to be addressed. Otherwise, you're never going to be able to accumulate money. The moment you get it, you're going to have an internal conflict, you're going to squander it, you're going to find reasons to get rid of it. So even unconscious. So too, if you have a belief that money is good, and it saves all and it heals all, and you're infatuated with money, that also has to be addressed. Because you're not seeing money for what it is. If you're infatuated with money, let's put money here. If you're infatuated with money, you're going to have this. You're going to be seeing more benefits than drawbacks. You're going to be consciously aware of the benefits. You're going to be unconsciously aware of the drawbacks. Whereas if you're resentful to money, you're going to be consciously aware of the drawbacks, unconsciously aware of the benefits. Money itself is neither good nor evil. It's neither good nor bad. So if you're judging money as either good or bad, you have an incomplete awareness around money. You're not seeing it for what it truly is. You're missing half the equation. Okay. So the origins of money. The money was established as a neutral medium to facilitate fair exchange between different value systems, between people who had different priorities and different values at their life in that point in time, different experts. Money itself is neither good nor bad. It's neutral. It's a neutral means of fair exchange. The labels we put on money of either good or bad are going to disempower us and stop us from accumulating and managing money effectively. Money loves strategy and it loves process. It doesn't like emotions. If you're highly infatuated with your money, you're going to be too fearful to go off and invest that money. And you're going to be too fearful to handle drawdowns and recessions and pullbacks, which are necessary to help your money grow over a long period of time. So if you're infatuated with money and you're fearing losing money, you can't do what is necessary to help you grow and accumulate money. So too, if you're resentful to money, you're not going to have it in the first place. You're not going to grow it. You're not going to have the desire to. So our judgments around money are very important to address. Our beliefs around money, even if unconscious and logged in the subconscious mind, need to be addressed. Now, not all money is made equal. Not all money is made equal. Now, not all money is made equal. And there are two main components that we want to take into consideration when we talk about income generation. The first is space. The next is time. You've got money you can make mobily and non-mobily. A mobile source of income is one you can make from your laptop, and you can be anywhere in the world at any time, or anywhere in the world rather, and you can still generate income. A non-mobile income is one that is required, where you're required to be in a certain place to make that income. You can also have an active income. You can have a semi-active income, and you can have passive income or semi-passive. Okay? Now, you can make money working a 9-to-5 job in a specific cubicle or in a specific place actively. You have to be at work at a certain place between certain hours, 9 to 5. That is what is considered an active, non-mobile income, right here. And you can make a certain amount of money, let's say $30 an hour, at a 9-to-5 job, working in a certain place at a certain time. That is an active, non-mobile income. Now, you can also work that same 9-to-5 job, but now you can free yourself of the space, and you can do mobily, work 9 to 5 wherever you want in the world. Okay? So you can still do 9 to 5 income anywhere in the world mobily, but you're still working active hours. Let's say, for example, in that situation, you're still making $30 an hour. Okay? Most people would argue that that's a better deal because you can go wherever you want in the world, and you can be wherever you want when you're making that money. Now, the next level to this is moving right, is then making the same amount of money with less hours. So maybe you're now working a mobile semi-active, which is potentially something like trading or anything like that, where you're still making a decent amount of money, the same amount of money, but with less hours. And you're doing it mobily. Okay? So up and right is ideal because now you're making $30 an hour over 8 hours, which is what, $240 a day. Let's say, for example, you're still making that $240 a day, but in 3 hours. And you can do it anywhere in the world. Okay? So you've just gone from a non-mobile active income to a semi-active mobile income. You can do it anywhere in the world, you're working less hours. So that money you're making here arguably is better than this money here. Because you're doing it in less time, you can do it wherever you want in the world. Most people would take that deal. Now the next level to this is a fully passive income, which is where you are timeless and spaceless. You don't have to be anywhere at any time. It's just a passive source of income. Really, one of the only ways to get that is through a dividend yield in a stock. When you're invested in stocks and the company pays you a dividend yield, that is what would be classified as a completely passive source of income, considering and assuming that the way you bought those stocks has been completely automated. Okay? So not all money is made equal. Most people would take this option here over this option any day. It's the same amount of money, but you've made it with less time anywhere in the world you want to be making money. So two very important considerations are time and space in the way you make money. We're going to be discussing more of this later in this particular video, and we're going to be talking about how you can leverage this and you can also move more right towards timeless and space of passive income, because that's very possible and that's really a very wise option for traders to do. Now, really there are only two sources of income. You have what is referred to as a zero-sum income stream. You also have what is referred to as a positive sum income stream. Now, there are benefits and drawbacks to both. There are drawbacks to zero sum, there are drawbacks to positive sum, there are benefits to zero sum, and there are benefits to positive sum. A zero-sum income source is a win-lose situation. A win-lose situation. I win, you lose. I lose, you win. Examples of zero-sum income source are trading, poker, sport, right? Anything competitive. Positive sum is a win-win situation. Win-win. I win, you win. You win, I win. It's more of the consumer-producer model. Examples of this would be something like a digital marketing, a digital service, or an online service, or something like that. But it's important to understand there's a difference between positive sum and zero sum. Most traders are here, which is excellent. Semi-active or semi-passive mobile income. What you want to be thinking about as a trader is how can I get to the next level? Because the game here is up and right. That's really the game, up and right. You don't really want to be doing non-mobile work, and ideally you're as efficient as possible so you can make as much money as you can. So you don't really want to be stuck in an active exchanging your time for hours. You want to have an asymmetric input-output. So up and right is the game. And you want to consider, as a trader, when you're making semi-active mobile income, yes, how you can leverage that, which we're going to talk about in this video, but also how you can then start to build a passive source of income, which we're going to talk about in this video as well. Now, most traders are stuck in a zero-sum game, zero-sum model. where they are consistently competing. And that can be a little bit exhausting. That can be and present some issues later down the track. So I also encourage traders to consider and ask themselves, how can I transition into somewhat of a positive sum income stream? And one of the easiest ways to do that as a trader is to use your skill as a trader to manage other people's money. And really, if you go off and if you're trading for a prop firm or you're trading private investment, you are using your zero-sum skill to also create another business around that, which is a positive sum, because you're in the trading win-lose situation, but now you're providing a win-win situation. You win, your investors win. You win, the prop firm wins. Okay? Just keep that in mind. Not all money is created equal. The game is up and right. Most traders are in a pretty good spot, mobile, semi-active, but you also want to start considering, how can I build timeless and spaceless income through investments and through passive income? And most traders are stuck in the zero-sum game, which can be a little bit exhausting. It can be quite difficult to sustain. So you also want to consider this positive sum. How can you open up a positive sum? How can you leverage the skills, the knowledge, the understanding you have to do more positive sum stuff? Now, trading is an interesting game. Effectively, what you're doing as a trader is you're having a look at back-tested data, to identify an edge in the market, to then trade that forward in real-life data, real-time data, to predict the next move, what is going to happen in the future, through what we refer to as a self-fulfilling prophecy, or a self-fulfilling action. Psychology and human nature repeats itself in the market. When people see the certain things happening, people do certain things. Through simple laws of supply and demand, we can have a pretty good idea of what is going to happen next. So trading is very much first and foremost about, one, identifying your edge. Having a crystal clear idea of your edge. In other words, your circle of competence. Where do you know you have an edge in the market? Now, this may take a little bit of time to get to. This may take a little bit of trial and error. This may take studying multiple different strategies and learning from multiple different people, and hours and tens of thousands of dollars lost in the market to refine and get to that point of your circle of competence. The place you know in the market that you have certainty you have an edge. But really, the first job of a trader is to help them identify that edge, that circle of competence. And then the next step as a trader is to help them put that circle of competence into a mechanical trading plan. Because once you are aware of what has worked more times than not in the past, and you've taken your edge, now you want to increase your probability of replicating that in the future. And the way you do that is by putting your circle of competence into a mechanical set of rules of, if I see this, I do that in the market, to help facilitate yourself replicating that edge in real-time data. Okay? So step number one is identify your edge, your circle of competence, where you are certain you have a probabilistic edge in the market. If you do this more times than not, it's going to play out. Now, that certainty in your edge may be over a larger sample space, over 1,000 trades. You can't predict necessarily what's going to happen next on the individual trade, but you can predict what's going to happen over a larger sample space. Then you take the components that make up that edge, from your entry, your management, your exit, your risk management, etc., your psychology, and you put those into a mechanical trading plan that allows you to come to the market every single day and execute on that edge. Now, if you need a mechanical trading plan, I've got the one I give to my six-figure traders in the link in the description. Download that and use that. Fill that in. Now, after you have your mechanical trading plan, the one thing that's going to stop you from consistently sticking to your trading plan once you're certain you have an edge is your mindset. It's your psychology. And more specifically, it's fear and greed. So after you have your mechanical trading plan and you are certain in your edge, you then need to master your trading mindset. This is when you start watching my YouTube videos. This is when you start implementing what I talk about on this YouTube. This is when you go into the description and download the second link in the description, which is the Bulletproof Your Mindset tool. This is a free tool that will help you start to empower your mindset. Because once you are certain you have a mechanical trading plan, then the one thing that's going to stop you from sticking to that is your psychology, it's your mindset. More specifically, it's fear and greed. I'm in this state of fear, in this state of anxiety. The market's presented an opportunity that aligns with my trading plan, but I'm too scared to act. I don't want to experience that pain of that loss again. Fear, anxiety, self-minimized state. That's going to stop you from sticking to your edge. Or I'm so exaggerated, I'm so puffed up that I feel invincible. I don't really care what the market's saying. I know what's going to happen next. In this self-exaggerated, self-righteous state when you force ideas onto the market. In both fear and greed, you're not going to stick to your trading plan and you're not going to have consistent profitability. So you have to learn how to master your trading mindset. Now, once you have your edge and you've identified your edge, you put into a mechanical trading plan, you have a tool to help you master fear and greed, then you have to consistently show up to the market and consistently execute your trading plan, your edge, with a balanced state of mind over and over. So step number 4 here is consistently execute your edge with balanced mindset. So that you can approximate your edge, you can approximate as accurately as possible the execution of those 1,000 trades. And because you're executing an edge, you're more likely to be profitable than not. Okay? So this is how you do this. You go from this to this. It's not about predicting the outcome of the next individual trade. You don't need to know what's going to happen next. Nobody knows what's going to happen next. Rather, it's about identifying an edge and consistently executing on that edge until you approximate profitability. These are the 4 steps to consistent profitability. My question is, how can you have consistent profitability if you don't have an edge? How can you have consistent profitability if you do have an edge, but you haven't put that edge into a mechanical trading plan that allows you to consistently stick to that? How can you have consistent profitability if you do have an edge in a mechanical trading plan, but you're run by fear and greed and you can't actually stick to that trading plan? And then how can you have consistent profitability if you have an edge in a mechanical trading plan with the right mindset, but you haven't structured your life in a way that allows you to consistently show up to the market and do that? So this here is also about structuring your life, structuring your relationships, your health, your work, your sleep, everything to ensure you have a balanced unit to be able to stick to your edge with a balanced state of mind. So each of these 4 components are necessary in order to achieve consistent profitability. Okay? But let's say you do, and you go off and you achieve consistent profitability. Excellent. Amazing. That's amazing. What you want to start to do now is you want to start to leverage your skill. The game becomes about leverage. It becomes about scale. I mean the same thing. And one of the best ways to be able to scale and leverage your skill as a trader right now is through prop firms. Just like anything in this world, there are both benefits and drawbacks to prop firms. Some of the benefits are that you can now leverage your skill. You can trade larger and larger of capital with very little risk and a very low barrier to entry. It's a small fee, you pass an evaluation, and you now have access to $100,000 or $200,000 in funding. You then get very good profit splits, and you have the opportunity to scale very quickly. Some of the drawbacks are that, yes, sometimes with regulations, there may be some issues with prop firms. There may be some slow payouts, or there may be some things when prop firms are still working out their teething issues. So be balanced on prop firms. Recognize, just like anything, there's going to be benefits and drawbacks. There are going to be drawbacks too to not trading prop firms. It's going to take a lot more time. So it's important to have a balanced perspective on prop firms, but recognize they're very important to use in order to scale your trading. So what I suggest traders do once they get to this point of now having consistent profitability, they understand money, they understand their beliefs around money, they've addressed those beliefs and anything about good and bad around money and these injected beliefs from authority figures or from their parents or from religions or school. They've addressed all that stuff, they've cleared their mind, they've achieved consistent profitability. Now, scale with prop firms. The way you do it is very, very simple. Step number 1. Start with one prop firm. And then past that, scale up with it. And then number 2, go to a different company, ideally in a different regulatory environment, in a different country, and do exactly the same thing. Repeat step 1. And then do that a few times until you have maybe 3 or 4 prop firms that are quite trusted, quite reputable in different regulatory environments with slightly different models, and get a few different accounts, accounts with a few different prop firms. And maybe you have anywhere from 100 to 200,000 with 3 or 4 different prop firms. Guess what? You go from trading maybe 40 to 50,000 or even less in some savings that you have to now all of a sudden managing anywhere from $300,000 to $800,000 in prop firm capital. More importantly, you're diversified. And each of these prop firms, you've got 3 to 4 different prop firms. Each of these prop firms have good scaling plans themselves. So you've got 4 different prop firms with their initial accounts, and then you start to scale those as you continue to trade successfully. Now, don't get me wrong, there will be some psychological challenges around your beliefs, around self-sabotage, around self-imposed ceilings you've put on yourself, around your beliefs around money, about how much you think you're worthy of having. It may bring up some guilt and shame. You may have to shed some old people in your life, and you may have to have some difficult conversations. So there will be some psychological challenges as you continue to scale up and you start to make more and more money and you start to deal with greater and greater paradoxes, because now all of a sudden you go from you in some situations $800,000 in prop firm risking 1%. That's a lot of money you got at risk, right? And you've got a paradox. You may lose that, you may win multiples of that. So you're dealing with greater and greater paradoxes as you continue to scale up. So you're going to have to do some internal work to be able to manage those paradoxes, manage being able to lose that type of money. Okay? But each of these have good scaling plans so you continue to scale your prop firms. Not because you're doing anything different, you're still sticking to the 4 foundational principles of consistent profitability. And you're scaling. And now you're starting to get some payouts from prop firms. And guess what you're doing with those payouts? We're going to cover that in a second. Okay? But by the way, this is where you start to get positive sum income, like we've talked about before. So you've gone from a zero sum income to now also generating a positive sum income. Okay. Let's backtrack a little bit, see if there's anything else we need to address. You scale up with prop firms, you keep diversified. It's very, very important, because if one of those prop firms goes under, like we've had recently, I do not like getting messages waking up, because I'm in Australia, waking up to a US client or a Euro client saying, hey, I lost $600,000 in funding. Okay, maybe we should have been a little bit more diversified than that. So don't put all your eggs in one basket. Don't put all your eggs in one prop firm. I don't care how profitable or how reputable that company is right now. We've seen recent situations, even some of the most reputable companies can get taken down. So stay diversified, because if one prop firm goes down and you got, four $200,000 accounts, you lose, of those one goes to three, you go from 800,000 down to 600,000, not 800,000 down to zero. It's a big difference in your mind. So stay diversified. Stay diversified. Very, very important. Okay, so you now use your leverage, which you have very easily accessible to you. This is all leverage here, and it's all scale. And you now go from, you tap into a positive sum income source, and you start to get payouts from these prop firms. And by the way, you want to maybe set up a trade copier here, so it doesn't become too much to manage. And you focus on managing your psychology. You focus on working with someone like myself, a performance coach, to help you stay sharp and to help you ensure that you can address all the subconscious stuff that's coming to surface, because now you're making way more money than your dad. You're making it in way less time. You're making it with way less effort, and you've got all this guilt coming up that you need to address, or whatever issues pop up. This guilt, this internal guilt of, shit, I made $100,000 today and I just walked past someone who's homeless on the street. How do you manage that? So there are real psychological challenges that come in when you start to scale up. That's why it's important to watch my YouTube and to look at the 12-week program and have a look into one-on-one coaching when you're ready for that. But you always stick to the 4 steps to consistent profitability. These things don't change. You just do what you do at greater scale, greater leverage, and you focus as an individual on managing the greater paradoxes. More profit, more loss. Nothing changes though. It's just done at greater intensity, at greater magnitude. Okay. Very good. Now you're generating income from your trading. You're generating payouts from your prop firm company. The income you generate through your trading is zero-sum income. The income you generate from the prop firms, the payouts you get from prop firms is positive sum. The income you generate from managing other people's money and maybe charging a management fee is positive sum. You have an option now. What I would suggest is, firstly, before we get into that, what I would suggest also is setting up a safeguard against the prop firms. So what you're doing first, the first goal is to achieve consistent profitability. The next goal is to secure max allocation with, maybe 2 to 3 to 4 prop firms. So you're diversified. The next goal here is to successfully trade these prop firms at scale to build a track record. Really what you're doing is you're proving to yourself and proving to future investors that you can successfully trade at greater and greater scales of money. And then step number 4, you may look at, it's an optional step, you may look at securing some round of private investment. So you move out the prop firm model entirely and you have additional diversification, you have additional capital that isn't tied up to the prop firm model, but you're utilizing the prop firms and you successfully trading those to go off and secure private investment. That is a pretty good way to safeguard yourself across prop firms. You start with the prop firms because they're very easy to access, and you scale up with prop firms to prove to yourself and to your investors you can scale with capital. And you just show them your dashboard, you show them your P&Ls with larger and larger capital. You show them what you're capable of, and then you also go into a probation period where you trade a small amount of the capital and you prove and you start to scale up with the private investment. But this is what I would call diversification from prop firms going to shit, right? We'll call it that. So be smart about it and utilize your skills and utilize things you have access to continue to scale. Now, obviously, this here presents some legal complications that you need to address, and you need to speak to a lawyer or an accountant or someone in your own tax city to ensure you get advised on that properly. That is not financial advice. Not financial advice. Make sure you speak to a professional on that for your specific situation. Okay. Now, when you're generating the income and the payouts from the prop firms, etc., and you're making money from your trading at scale, it's important to consider a few things. The payouts can go into your personal accounts, your personal trading accounts. Yes. But remember, as long as you're trading, you're still working for money. It's still a semi-active source of income. Money isn't yet working for you. You haven't quite hit that timeless, spaceless income. So yes, it could be wise to take payouts out your prop firms, put into personal accounts. But it's also wise to consider starting to use some of your income to generate timeless, spaceless income. And again, this is not specific financial advice. Make sure you speak to a professional about your specific situation. But I'm giving you a general overview or a model that is important or wise to consider, I think, for every trader. So you want to think about it this way. Income comes in and you put that income into savings. You pay your necessary taxes. And you know what your outgoings and expenses are. Let's say, for hypothetical sake, you spend $5,000 per month. Those are your expenses. Now, you've heard me say on this channel that it's wise to have cash savings anywhere from 6 to 12 months. Let's go with 6 months of cash savings. If you know your expenses are $5,000 per month, then you want to build 6 by 5 equals $30,000 in cash savings. And you want to have $30,000 in cash savings sitting in a bank for multiple reasons. But one of the most important reasons is a psychological buffer and a psychological assurance that you have money in the bank. What that does is it brings stability to your mind, and it brings, as a result, stability to your trading. It brings stability to your life. So don't neglect cash savings. Yes, I know you're losing money because of inflation. Yes, I know you could buy Bitcoin with that $30,000 and turn that into $1 million. I know all the excuses or justifications that you're trying to convince yourself of to not keep cash in the bank. But the cash in the bank will do so much for your mental stability that it will pay dividends, even in just in the fact that you won't be stressed. Okay? Now, once that cash savings reaches your cash buffer of 30,000, anything that spills on top of that is wise to consider investing into timeless, spaceless income and taking advantage of compound interest and taking advantage of dividend payouts and structuring this in a way where you can sustain this over a long period of time so you can take full advantage of compound interest. Until you set up an investment and you go off and buy an index fund, for example, that pays a dividend every quarter, you are working for your money. It's not working for you. So as a way to go up and right, all the way right to timeless, spaceless income, you really want to be buying income producing assets. Income producing assets. This, for example, can be an index fund that pays a dividend. Now, just for example, that's how you can complete this little model overview I was going to give you today. There are also other ways you can invest this money. You can invest it in your education. You can invest it in your experiences. You can invest it in travel. You can invest it in mentorship and books, which probably, if you haven't already done that, will probably pay more dividends in just life experience and developing yourself into an individual that you're proud of than buying an index fund. So it's probably wiser to start by investing back into yourself, into wise things like meaningful travel, meaningful relationships, meaningful knowledge and information, meaningful mentorship, things that are meaningful to you, or even investing back into your own business, a meaningful business to you. Okay, but also keep in mind this whole idea of the fact that as long as you're not buying index funds or long-term income producing assets, you will be working for your money for the rest of your life. It will not be working for you. Really, you want to be getting yourself to a point where you can be buying income producing assets that generate money for you. And yes, that may take 40 to 50 years or may take 20 to 30, depends on how intensely you do it and depends really on your expenses as well. But that's the goal. The goal is up and right, timeless and spaceless income. Okay? Something to consider. So let's do a little bit of a backtrack. Take full advantage of the opportunity you have as a trader to leverage prop firms, to leverage your skill of mobile, semi-active income. The other thing about mobile income and semi-active is you can travel, you can explore the world, you can experience the world. That in of itself will pay dividends. The fact that it's semi-active, with your extra time, you can dedicate to personal development, leveling up, going to the gym, starting another business, investing in meaningful relationships. Really what you value, your priority system will determine where you spend that extra time. To study, to learning, to developing, those types of things. Now, there's also a few other additional components I would really love to discuss that most people neglect. And this is when we talk about life outside of trading. You have 7 areas to your life. You've got your health, you've got your wealth, you've got business. Wealth is more finance, personal finance. Business is more income. It could also be a job. You've got your relationships and family. You've got your mental faculties and your learning. You've got your social leadership and your impact on other people in your life. You've got your spiritual mission and your spiritual path. That can mean anything. If you're a trader, it could just literally mean your dedication to your trading. It doesn't have to be something religious or spiritual, but it's whatever is meaningful to you, your mission. It's your mission in life. 1, 2, 3, 4, 5, 6, 7. Your health, your wealth, your business, your relationships, your mental, your social leadership, and your spirituality. Now your trading kind of fits into this one here, business. Your investments, which we just talked about, will fit in here with your wealth and your personal finance. Now, any of the areas that you're not empowered in will ultimately impact your trading negatively. If you have poor health and you have a very foggy mind, or you're unwell, or you're sickly, or you don't have energy, you don't have focus, then it's going to impact your ability to come to the markets and trade successfully with a clear mind. If you don't have an income source, right, your business here, if you don't have an income source and you're desperate to have to make money from your trading, guess what? You're going to be caught in fear and greed. You're not going to stick to your edge. So a big component of successful trading is having the other areas of life empowered or working on them. But very importantly, it's important to have an income source, either part-time or full-time, to help you generate income while you're learning and developing the skill of becoming the asset of becoming a consistently profitable trader. So a part-time or a full-time income source. Very, very important. Because what happens is if you don't have that, then you're going to go into fear and greed. You're not going to stick to your trading plan, and you're certainly not going to achieve consistent profitability. You're going to be breaking the 4 steps to consistent profitability. So have an income source there while you learn and develop your trading. Do not neglect your health. Do not neglect sleep, eating wisely, exercise. You don't have to go crazy with your exercise. Just whatever is meaningful to you. If you don't empower your relationships with your family, you're going to have a lot of arguments. You're going to have a lot of challenges in that area, which are going to impact your trading, your fulfillment, and your mental state when you trade. If you have issues with that, check out my videos on the YouTube. Check out my 12-week program. Message me. I'll help you with that. You don't want to be disempowered mentally. You want to be smart. You want to be sharp. You don't want people taking advantage of you. You want to know exactly what you're looking for and be clear on that. You also probably will, when you start to scale up with your trading, realize that when you start to make enough for yourself and you start taking care of your family, there's maybe a social impact or a social cause that you're inspired by, that you'd love to talk about, that you'd love to share, that you'd love to help other people with. For me, I love psychology. I love mindset and understanding that and helping people empower their psychologies, especially traders. And that's what I wanted to do. That's how I wanted to express that part of myself, the social leadership part of me. I wanted to be a leader in this space that helped individuals who had psychology issues, minor or major, to help them overcome those. And then your spiritual mission, which is just your mission day to day. It doesn't have to be anything fancy. It doesn't have to be anything rah or religious. It's just what's meaningful to you and your mission. So if you're disempowered in any of those areas, they're ultimately going to affect your trading. But the one I see consistently pop up is so many traders don't have an income source. They're desperate to make money. They come into the market with this fantasy, this idea it's going to happen quickly and easily. And really they get the exact opposite. They get difficult and long and slow. Okay? So you need to have an income source, part-time or full-time, while you're learning and you're developing, as well as cash savings. If you have those 3 things or 2 things, income and cash savings, and you then give yourself permission to go through the 4 steps to consistent profitability, you're going to put yourself in a higher probability of succeeding and sustaining your success. And then you're going to have ammo to spend on prop firms and to scale with prop firms, which is also important. So don't neglect this, please. And also, do not neglect the other areas of your life. I understand why a trader may dedicate themselves for a 3-month period or a 3-month sprint to really understand their strategy and go all in to study and backtest and become very good at that. But neglecting the other areas of your life over a longer period of time is not sustainable. So focus on holistically empowering all 7 areas of life. And have a structure and have a calendar and have a little structure to your life that gives you a little bit of time to go and do your health stuff, go and do your learning, go and do your, spend time with your loved ones. Okay? And it's also important to link your trading to these areas so you can see how they help your trading and vice versa, how your trading helps the other areas. So they're not separate and segregated areas in your life, but they're a cohesive unit that help each other. Okay? The more separation you have, the more energy you're going to lose. When they're concentrated together, you become more energetic and your life becomes more fluid. So link the areas to your trading. Okay? So these are all important considerations to take on board. And trading is much more than just buying and selling. Trading and life cannot be separated. Really, if you aren't empowered yourself as an individual and you have issues with self-belief, and you have issues with guilt, and you have issues with how you see yourself as an individual, if shame or pride, or you're highly resentful to yourself over what you think you did to other individuals or to yourself in the past, guess what? The market is just one big mirror. And you're going to end up throwing all that stuff onto the market, and the market's only going to reflect that back onto you, and you're going to have to face your own stuff. So one of the most important considerations to trading, really after you have your edge, is mastering your psychology and mastering yourself. The mastery of trading is very much the mastery of yourself, and understanding yourself on a deep level, mastering yourself so that you can go off and make money. Why? Because the markets is just one big neutral mirror that's going to reflect back onto your own insecurities, your own stuff, your own judgments, and you're going to be faced with that every single day. And if you can't face that, if you can't address it, if you can't work through it, there's no chance you're going to have consistent profitability. So self-mastery and trading mastery are very much entangled. Okay? Now I think that's probably enough. It's nearly an hour of me talking. Okay. Hope you learned something. If I can help with anything, message me, comment. You know how to find me. Email me. I don't care. Message me on Instagram. I'm here to help. Thank you for watching to the end. If you found this useful, share it with your trading buddies and your trading communities. And I look forward to seeing you all in the next video.